we got some more good news today, sending the markets absolutely soaring. So we're going to take a peek at what that good news is, but it's an indication that inflation is easing once again. But we're also going to take a peek at some bad news as well, because something that may be affecting you or your family is at a 15-year high right now. So that's not good news. And then eventually we'll take a peek at the broader market in this video as well. But without further ado, let's take a peek at the good news today. The producer price index rose 0.2% in October, below the 0.4 estimate. A significant contributor to the slowdown in wholesale inflation was a 0.1% decline in services, the first outright decline in the measure since November of 2020. So we're actually seeing prices go down for services. This is really, really good news overall for the economy. It means what the Fed is doing with these aggressive rate hikes, it means it's working, guys. It's working. So let me know how you're feeling about this stock market right now. Let me know if you're struggling with this next issue that we're going to talk about. But unfortunately, credit card usage and debt is growing at its fastest pace in the past 15 years. The credit card balance collectively rose more than 15% from the same period in 2021. This was the largest annual jump in more than 20 years. This happened for a couple reasons though, right? Prices were going up like crazy, right? And consumer demand was also going up at the same time. But I think it's all kind of starting to catch up to people, because we are seeing these tech giants and big companies lay people off right now because they hired like crazy after the pandemic. So let me know how you're feeling with this economy right now. But without further ado, let's jump over and take a peek at the major indices. All right, guys, all the major indices are in the green today. The Dow Jones Industrial Average up 0.56%. The S&P 500 up 1.29%. And the NASDAQ up 2.24% on the day. Fantastic news, I think, out there for the economy going forward. I think this will signal to the Fed that they can be a little less aggressive going forward. Guys, thank you so much for joining me for another video. I have some exciting changes coming to the channel next year. So hopefully you'll stick around for it. Those of you that have followed me this far, I think you will. So guys, thank you so much for joining me for another video. And as always, I'll see you in the next one.